Welcome to Islamic Finance Unboxed. This is a space where we slow financial conversations down, open them carefully, and look at what's actually inside, not just contracts and terminology, but the values they quietly carry. Here, Islamic finance isn't treated as a list of rules to memorize, but as a way of thinking about fairness, responsibility, and human relationships under uncertainty. Today, we're unboxing a question many people think they already understand. Why Riba is more than just interest. Beyond the number, most conversations about Riba begin and end with a number, a percentage added to a loan, a line in a contract, something technical, something small, something people assume can be adjusted or justified depending on time and necessity. But the reason Riba is treated with such seriousness in Islam is not because of the number itself. It is because of what that number represents in human behavior, in power, and in how responsibility is quietly shifted from one side of a relationship to the other. The pattern that existed before banks. Long before modern banking, long before spreadsheets, contracts, and digital transactions, Riba already existed as a human pattern. It appeared wherever scarcity met power, wherever one person had excess and another had need. The setting did not matter: a marketplace, a household, a season of drought. What mattered was the structure of the exchange. An agreement formed where one side was insulated from loss, while the other carried uncertainty alone. This imbalance was not a flaw in the system. It was the system. The terms were designed so that risk moved in only one direction. The lender's position remained untouched by reality, while the borrower's future became collateral. Whether the venture succeeded or failed, whether conditions improved or collapsed, the outcome for one side was already decided. Gain became detached from consequence. When common is mistaken for neutral. When people say, interest is everywhere now, they are right. But being common does not make something neutral. Many systems become normal not because they are just, but because they are convenient for those who benefit most from them. Riba, at its core, turns money into something that grows without effort, without exposure, and without accountability to outcomes. Whether the borrower succeeds or collapses, whether circumstances improve or deteriorate, the return remains fixed. Reality becomes someone else's problem. What Islamic finance actually resists. Islamic finance is often misunderstood as being against profit, growth, or ambition. In reality, it resists something much more specific and much more subtle. It resists insulation, the idea that one party can step outside uncertainty while still demanding reward. It challenges the assumption that financial success should be protected from consequence, even when that protection is purchased at the expense of someone else's exposure. In genuine trade, both sides remain connected to reality. Value is created, exchanged, and tested by what actually happens afterward. In partnerships, this connection runs even deeper. Success is shared, but so is failure. No one is fully shielded from outcome, and no one is abandoned to it alone. Risk is not eliminated. It is acknowledged, distributed, and carried together. Riba breaks this connection. The moment the contract is signed, the relationship quietly ends. What remains is obligation without presence. The lender steps away from uncertainty, while the borrower continues forward carrying both the weight of effort and the pressure of guaranteed return. If circumstances improve, the terms do not soften. If circumstances collapse, the demands do not pause. Reality becomes irrelevant. The uncomfortable question we avoid. Profit, in contrast, requires presence. It requires involvement. It requires the humility to accept that outcomes are never guaranteed. In Islamic models, return is tied to reality, not abstract certainty. If there is success, it is shared. If there is loss, it is faced together. This is not idealism. It is restraint. What makes this discussion uncomfortable today is that many people benefit from systems that look like Riba even when they no longer carry its name. Modern finance has become very skilled at renaming risk transfer, at hiding certainty behind complexity, and at normalizing extraction as innovation. So perhaps the real question is not, is this interest halal or haram, but something more difficult. Who carries the risk when things go wrong? Who is protected when reality intervenes? And at what point does protection turn into moral distance? Because if Riba were only about interest, it would have been easy to replace. But if Riba is about how we treat each other when outcomes are uncertain, then the conversation is far from over. And maybe that's why it still unsettles us.